Oh, but it's different this time. It's not like the dot-com bubble. It's not like the housing crash. No, it's exactly like it, times more leverage, times more risk. Welcome to the Best of US Investors weekly review, where I go over the Friday Platinum call, and I also go over Kerry's call that we have at 3 o'clock on the Platinum channel. Now, if you have been, well, under a rock for the last, I guess, year and a half, AI has been the headline news of every channel, every financial channel. It's about Nvidia, it's about Meta, it's about semiconductors, it's about Taiwan Semiconductor, it's about Intel, it's about AMD, yada, 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 blah, blah, blah. And now we're at that point where people are now saying, oh, but it's different this time. This is changing our world. Folks, it is not. We will review this week the Nvidia earnings day and the excitement of that, along with our continuously increasing US debt that is at a rapid click. And we will also hit upon a handful of other things, and Kerry's how he's going about analyzing stocks and what stock prices you should buy stocks at. In this first segment, we talk about, well, I took a position on Nvidia, and it may surprise some of you of what I did. In this next segment, we talk about that along with what we're experiencing with the Nvidia earnings and Mark's perception of it as well.
Fantastic.
Are you guys recovering from your Nvidia day?
What a day.
Oh my God. That was nuts.
Oh my God. Watching that thing just pop, it was insane.
Yeah. FOMO.
Yeah.
Trent and I were watching it, and after hours, just in a chart, it was pretty insane.
Yeah. Yeah. And today it's going down.
The market bounced back a little. Dow's up 100, and Nasdaq's up a half point, and S&P up 10.
Yeah. Yeah, I bought full disclosure, I bought April 19th 500 strike price Nvidia price this morning at
Good afternoon, Franco.
good
Okay.
afternoon.
Sounds good. Bye.
I bought them at 70 cents. So
You buy it?
what's that? I bought a put. Yeah.
500 strike price?
Yes. I bought it at 70. It's trading at 93, or sell. The ask is, or bid is at 90. The ask is at 93.
Wow.
Yeah. So doing okay, but I'm in it for the long run. I'm looking for Nvidia at 500. Then I can go out to dinner.
Yeah, or not.
Or not. Yeah.
Yeah, it's crazy. I put something on the Discord yesterday, just in my office, about how this last week has really reminded me. And I was at this during the .com crash, and it just reminded me of that time period. So I went back and I put some thoughts on that. So it's in my office. You can go read it. But just the euphoria and the concentration, and it was just a crazy time. And it's one of the 5 things that I remember, vividly. It is one of the things in my life that affects me is when that whole bubble crashed.
Saw the food.
I went down to our margins department, and a lot of people had margin on their account because everything was going up and everything, you just couldn't lose. And then it all unwound. And just to go down and listen to the calls of the margin department calling people and calling their margin, and you have to sell out everything. You have a certain amount of time, and then they just sell you out, and then you could lose literally your whole life. And I saw people do that, and I can hear the desperation in their voice. But it's serious stuff what we're doing here, and it's, if it were easy, then no one would have to work, and we could all just sit here and do it. But that was one of the 5 main times in my life that really affected me, hearing people's lives crumble in front of them because they got out ahead of their skis, and then everything went down. So probably makes me the conservative investor that I am, that one moment, just hearing people. And so that's why I wrote that, just because it just reminded me of that time. Not that we're doing that now, but it just reminds me of that time, and the euphoria that a certain amount of stocks had. Back then it was the internet craze, and anything that had .com behind it was, everyone bought it. And it just kind of like this whole AI.
Yeah.
Anything that has AI around it now just seems like just going nuts. And Nvidia had a really incredible earnings report, and it took a lot of stuff up with it, and it just kind of reminded me of the same thing. So just be cautious, and always, remember, it stairs up an elevator down, and that's why we have stops, so that we can get stopped out and not fall down if the house of cards falls apart. And I'm not saying it is, but always keep it in the back of your mind.
Yeah.
So
I think I did a video last weekend about SMCI, and to be aware of the price action on it. And my numbers were, I think, were off, but I think what we're seeing right now is that action happening where you have a major sell off, it comes down to some level of support, it slings back up, and then it hits a point where then it pulls back. And Nvidia can be a prime example of what we're seeing, happening today. But Mark and I talked about this the other day. I was like, as long as they're willing to write contracts, the market will continue to go higher. And what I mean by contracts, they're willing to write buy calls. And if the retail market continues to buy calls, and the market makers will write them. And until that changes, this market could go higher on this false hope environment.
The US is over 34 trillion in debt. 34 trillion in debt. It is the number that we're increasing in debt every day is the heartbreaker. It is, if you are just your regular household was going up in debt at the rate that the United States government is, well, you'd just be living on the streets, which maybe some people are because of this. In this next segment, Mark goes over the numbers on how fast the US is increasing their debt, but also the lack of interest in other people and countries buying our debt.
the 20-year Treasury auction went off this week. It went poorly. It was on Wednesday, and that led to a broad-based sell-off in government debt. So the outcome of the sale was very ugly, which was quite surprising given the fact that the 20-year was fairly well bid. Said Tom did Galoma, co-head of global rates trading for BTIG in New York. Direct bidders took 19% of the sale, indirect bidders took 59%, and dealers took a higher than average 21.2, he said. Soon after the results came in, 1-year through 30-year rates all headed higher on the day. So there was poor demand in the session for 20-year bond auctions by the Treasury, sparked some selling for elongated debt instruments. So what that means is that an anticipated amount of Treasuries, 20 years they were going to sell, and that the auction didn't go off well enough that they didn't sell all of them. So the demand for 20-year Treasuries is down. China's not buying. Japan's not buying. So they're relying on retail buyers. I told Trent, I went in and actually I bought some. It was supposed to be at 4.5%, and I think it went off at 4.6%. So they're using these Treasuries, long and short term, to replace Treasuries that are already expiring. Okay, and those are at a lower rate right now. So the government's paying a higher rate, but the demand is down on these Treasuries, and these are what they're using to fund the government operations, to pay debt. And you can see our national debt going up while our spending continues to go up. And so in order, if the demand is down, the only recourse they have is to raise the yield to try to get more people to come in and buy, which is in retrospect going to make borrowing costs higher and going to make the debt even go higher for the U.S. government. So it's, for me, the way I look at it, it's a catch-22. When we talk about the national debt, just last week, national debt measures what U.S. owes its creditors. It increased to 34 trillion, 266 billion, 61 million, 12,653 and 21 cents as of last Thursday afternoon, according to the latest numbers published by the Treasury Department, and that's up 20.74 billion reported the day before. So our debt is going up 20.74 billion a day, and we have to pay with this with treasuries, and it's something that, on the fund side, we're seeing the markets go up, and we know the market is not the economy, but again, here we are. Debt keeps rising, and how long can we continue to service debt, paying for it with treasuries, and we'll see. 4 decades ago, the national debt was 907 billion. Now we're at 34 trillion.
With all of this that's going on, with the hype in AI, with the hype in possible interest rate cuts, it is so important for you right now to protect your assets. In this next segment, we talk about protecting your investments and how Mark goes about doing it, and maybe another way of considering it.
Hey, Mark. So there was a
Yep.
question asked in the chat. So on your trades, do you put a trailing stop at 3% typically?
I will be aware of where 3% is, but I will normally look at where the support and resistance are. Whether it's a Bollinger Band or whether it's a sell order, where the sells are on the top side, or a support level on the bottom side. The other thing that I don't like to do is, once I get ahead of my cost basis, okay, let's say I buy a stock at $10 and all of a sudden it's at 17. Okay, well, I'm going to look at that and say, no matter where the resistance and support are, I'm going to say, I'm not going to lose money on this trade. I'm up. So I may put a limit at, let's say, 15. Okay, and just say, I'm willing to take $5 a share and lose 2 on that percent. And that's just something I do personally. Again, it's where you put your stop losses. I mean, if I were to do it that way, on a percentage basis, and it made sense, it would be 3% for me.
Gotcha.
And it depends too. I mean, if you're trading a stock that's $7 to $10, it's a lot different than trading a stock that's, like Berkshire Hathaway at 400. Because you're talking bigger sums of money there.
Yeah.
Even though the percentage might be the same.
Mark, do you consider ever like the overall portfolio value and the
Absolutely.
maximum loss you're willing to take on the overall portfolio?
You mean like the paper trade?
The paper trade, or just in general? Like,
If I'm looking at this and I'm at, February 22nd, whatever, and we're up $5,400, it's human nature. You might take your risk tolerance out a little bit higher because you have some money with here.
yeah,
And you gotta watch that too, because again, I like this week, I'm going to stick with my trading plan and what I like, because I got a little bit over my skis and out of my comfort level this week. I mean, I stayed within the trading plan, but I wasn't as conservative, and I tried to let it run. And RTX got to me. I got out of Editus. Wasn't that much money, but percentage wise, it was. Again,
yeah.
did that answer?
I've read a handful of traders who will look at if they're trading say $100,000 portfolio, hypothetically, they will set a limit on how much they're willing to lose of the overall 100,000. So if it dips, 2% or 3%, they just liquidate everything. And that's real. I mean, it's a trader's portfolio, whereas a long-term investor may have a bigger downside tolerance.
The one thing about Kerry is he just never stops thinking. He never stops looking at how you can get the best price on an investment. In this next segment, he shares with you what he's been working on identifying where to possibly buy these stocks, what their true value is worth, and how you should go about analyzing them. Now, none of this is recommendation or advice. I think you all get that by now. But he is pushing us to think, what are these companies really worth, and how to break them down and figure out what the best price to buy them at is.
This is something that I've been working on this weekend, and it's in its infancy stage, because what I wanted to do is say what I learned from looking at the charts is ChatGPT was introduced to us in November of 2022. But then we went through 2023 and everything was flat. And then in November of 2023, the AI bug took hold, the hype took hold. So what I did was I took all the stocks in the bus 12 and bus 13, and I said, okay, what was the price of Apple on 11/1/2023? It was $173.97. What was it on February the 1st, 2024? It was $186.68. It gained $12.68, or it was up $7.41. What is it selling for today? $182.52. So it lost 2.5% of its gain from the hype period of AI. Okay, what I'm looking for here is opportunities. Who isn't priced properly or overpriced relative to, and so what I'm looking for is low numbers over here or negative numbers. And to emphasize that, I want to take you down here to Nvidia and SMCI. Here is Nvidia. Nvidia got a gain from November the 1st to February the 1st of 48%. And then since February 1st, it's up an additional 37%. Okay, that's pretty stout. SMCI is up, went from November to February 131, and then it just added at 109. That's even with it being down, I think it was 10 or 20% today. But look at Rambus. Rambus is a memory chip. It went up 25%, and then in the last, 23 days, it lost 22%. Why? Because it isn't making GPUs. It's making memory chips. What is a memory chip? A GPU and a CPU is a processing chip. So what it's doing is you're giving it a task, and it performs the task. And then a memory chip remembers what it just did, so it can refer back to it. That's my understanding, a very basic understanding. So Rambus, as I would understand, is not getting orders for their chips for the computers that are going into the data centers like Nvidia is. Supermacro buys the chips from Nvidia and puts them in the box, the computer that they then sell to the data center. They then, when they have to upgrade the memory end of it, they will probably buy a lesser computer that will sit alongside or near that processing computer. and that's how the system will work. So you have the initial build out, and then you have the systems that follow up that come in afterwards. Now, the other thing that Jensen explains that I think is very, very important is he says, even though Microsoft and Meta are my two largest customers, they make their own GPU chip. They recognize this was going to happen. And so for the chip that Google or Meta needs to perform their function, they use their own chip, but they still need Jensen's chip to do the large language processing. That's how I understand it. So my reading on this is, if I can identify the companies who didn't have big earnings in this last quarter, but will catch up, then that's where my opportunity is. Now, if I can find a company who actually is a good, integral part of the system, and they lost money this last quarter, now I can get a exponential growth. My favorite, what I think of that will be AEHR. They actually had a drop of 36% through the hype, and then only went up 3%. What do? They make the testing equipment. So ASML makes the big box that prints the wafers. They sell that big box right now to Samsung and Advanced or Taiwan Semiconductor. Then Taiwan Semiconductor makes that wafer, but then they have to test that wafer to make sure that every one of the transistors on the wafer works properly, because they can't send that wafer and the semiconductors out without testing them, particularly if they're going in a fighter jet or an autonomous automobile. Again, it doesn't make a whole lot of difference if it's in your toaster. They'll just replace the toaster. But if it's a high intensity chip, it has to be tested. Right now, they aren't doing the testing. They're building the systems that have already been tested from Nvidia's chips, from Apple's chips, from Microsoft chips. So their business will come back. The other element I've learned about Air is their biggest customer is ON Semiconductor. ON Semiconductor is dedicated very strongly to the EV market. Well, we all know the EV market is down. You did not buy a new car, and the reason actually any car, it doesn't only have to, you didn't buy a new car because of interest rates and inflation. You didn't buy a new phone because of interest rates and inflation. So when interest rates and inflation come down, you will buy a car, you will buy a toaster and a new phone, and AEHR's business will grow. So that's what I'm looking at. My favorite stock of all of these is this one, SYM, Symbotics. They're into robotics. They are updating the data set or the distribution centers of Target, Walmart, and many other stores who are waiting in line for their product. They got a 41% gain in price from the hype of AI, but then in February 1st, when the hype wore off, they lost 19%. That's an opportunity to me. So that's why I'm doing this chart. Now, another thing that just leaped out at me was, look at this. This is Modine. Modine is a heating and air conditioning company. for data centers.
That was quick.
These new computers generate less heat, but there are going to be more of them. So all of these data centers have to be rebuilt with heating and air conditioning. 73% off the hype, another 23% this month. This is probably a stock I don't want to buy because, or I do, I don't know. Do they do the heating and air conditioning and follow Jensen around? I don't know. This is another one that leaped out at me. That's Palantir. I compare it to CrowdStrike. They're a cybersecurity company. They had a 67% hype bump, but this last quarter,
Archie.
only 6%.
You
But
on
look
okay?
at Palantir.
You
They're up
get my message or?
44%. Yeah. I think Palantir will come down. So what I'm doing again, and okay, this is another cybersecurity company. You know it from earlier this week. It lost 27% of its value because they came out and said openly, it isn't happening. AI is not coming through our system yet in the form of orders. So they dropped 23%. And then CrowdStrike was up 67. They're also cyber. I believe Palantir will drop, as I said, below about $19.06 to be exact. So what I'm using this for is a means by which I can identify opportunity. I get emails and comments that say, have you looked at such and such a company? If it is not in the semiconductor world, I'm not going to look at it. I strongly believe that if I start going off in other directions, I'm going to lose my edge. I need to understand this business. The other, if you haven't seen the video I did on Intel, you need to own some Intel. As you can see,
That's not a recommendation or advice.
Huh?
That's not a recommendation or
No,
advice.
that's not a this is just my observation. We are in a very precarious position as to saving our position as the superpower of this world, which we gained as a result of the end of World War II. The most important product made in our lives going forward in the foreseeable future is semiconductors. It is going to change our medical field. It's going to change everything. He who makes the semiconductor will rule the world. We don't make any. We don't make any GPUs here in the United States, other than advanced macro devices. They make some. We have to make most of them. 80% of them, of the super semiconductors, are made by Taiwan and Samsung. The machine that makes them is made by ASML. They are the only company in the world that make
photosynthesis.
No, it's what they do is they use a very high intense laser, shoot it through a Zeiss icon lens, it bounces off of a mirror, and then it reflects into a wafer that has etchings in it that gives the format for the board that is going to create the 1 million semiconductors on that wafer. And that wafer is made by another company. That's I have it here. But anyway, ASML has announced that they have the new generation. They announced this 2 years ago, that they have the new generation of this machine. These machines cost $400 million a piece. They went to Taiwan and Samsung and said, how many do you want? And they both said, we will not be in a position to buy them until 2030 because we're still paying for the ones we bought from you 5 years ago. And you think about this, you spend $400 million on a machine to make a disk. Well, you got to sell so many of those disks before the machine is paid for, and you make a profit. Well, if you aren't going to make a profit until 2030, then you're not going to buy the new machine. So that means whoever buys the new machine is going to have capability and technology that is better than what Taiwan and Samsung has. Who bought the 4 machines? Intel. They've taken delivery on 2 of them. And Joe just gave them 10
billion.
Was it billion or
No, billion.
10 billion, and they've said we need another 10 billion. So in the very near future, when Apple needs semiconductors for their phones, when Amazon needs semiconductors for their data centers, who are they going to buy? Who are they going to have them made by? A Taiwanese company, a Korean company, or made in the USA? I don't think there's any question on this. I don't care who runs for president and who is president. This is a issue of national security. So this is going to point me in the direction of what stocks I want to own in the semiconductor field. And my commitment to you is I'll continue to learn about these and share my information with you. I don't know exactly what I'm going to do with this chart. It's a living chart in that the current price updates. I think we'll probably integrate it somewhere into or below my cheat sheet. Because again, I think it's important that you understand where to buy. This is the cheat sheet. You're going to find I've added another column. This is what Mark has. This is the analyst. I subscribe to a service that I check on a weekly basis that tells me what do the analysts believe Apple will sell for by the end of this year. They believe it will sell for $250. I then take Mark's teachings and I look at the charts, and I find that the charts indicate the resistance level is at 198. I then add those two numbers together, divided by 2, and I come up with a number. I divide it by this number, and it says if I'm able to buy Apple at $180, I will have a gain of 24.44% at the end of the year. What this number is a service that is called fair value. What I interpret that to mean is they only look at the financials. And they look at the PE ratio, the price to book ratio, all the different ratios, and they say based on logic and financial good sense, this is the fair value of Apple today.
All the way out.
Okay.
It's okay.
So I don't know how I'm going to incorporate that, but look what some things are. This is Intel. It says the fair value of Intel is $7.44. It's selling for $42. Why is that? Because Intel is not making any money. Now I have to decide, how do I interpret that relative to what I just explained to you about Intel? Let's look at Nvidia, selling for $788 a share. The analysts believe it's worth 1,000. Tech says it's worth 900, and fair value says it's worth $529. I don't tend to agree with that, but I want it there. I want to understand it. I just bought yesterday Photronic. Photronic basically makes, I explained to you that the laser shoots through mirrors and lenses and goes onto a screen, a photonic screen that etches in the laser into that wafer. That photonic screen is made by Photonics. Photonics is selling for $28 a share. I'm trying to buy it. I already own some. I bought some earlier this week at 27. The analysts say it's worth 53. The technology says it's worth 32, and fair value says it's worth 98. Fair value, again, is PE ratio, price to book ratio. Again, I need to figure out how to interpret it. Pure storage, again, one that it gives me another look. What I've then done is, without these numbers in, I've made the decision, what if I do buy Nvidia at $664, and which is, the likelihood is slim and none, I will make 40%. What if I buy IBM at 152? I'll make 18%. So my mind said, what I'm really interested in is these numbers. If I'm right about Excelis Technologies, and it's selling for $109, and the analysts say it should sell for $197, and tech says it should sell for $164, and fair value is $197. If they're right, I make 72% this year on that stock. So that's what I'm focusing on now. Where can I make my good money? Look at this. This is Tesla. Again, something of an anomaly. Fair value is $100. It's selling for $191. The analysts say it's worth $227, and the charts say it's worth $300. So that's how I'm using my my cheat sheet. Again, one of my favorites in air systems. They say the fair value is only $7.32. Again, I got to learn more about that. So that's what I'm doing. That's how I'm approaching this. And I think it's important that you understand what those numbers are and how you can then interpret them for yourself.
Today I am in Forsyth Park in Savannah, Georgia. I'm here. I had one child graduate school from here. I've got another child who's probably going to transfer back here after transferring away because of the competitive nature or lack of competitive nature of the school that she is at presently, which is a state school. She wants a career. She wants to know that she has a skill, and coming back to Savannah and going to Savannah College of Art and Design could potentially give her that. So I'm here in Savannah actually for a wedding. So with that said, what I think you gotta consider, and why I shared that with you, is that you have to be pushing yourself to better yourself, to adapt to the world we live in today. And your skill set, how you go about analyzing and purchasing investments, how you are as a person, especially you men, me men, we got to become better gentlemen. And that is what this is all about. Being better than we were yesterday. So I appreciate you all watching the video, because it's a long one. And I hope you hit the subscribe button and take advantage of our 50% off the Platinum channel for 3 months. After that, it goes back to the $60 price tag. But the value we're trying to put in and putting in can make you a better investor. So subscribe today. God bless you and take care.